Prof It here again. Yes, Profit, your professor of profit. Today we're going to talk about balance sheets. What is a balance sheet? Why do we use it? And what does it show us? The balance sheet is a financial statement that summarizes a company's assets, liabilities, and shareholders' equity. And the important bit here is it's at a specific point in time. It's a snapshot of the company's financial position at a particular date. And therefore you will see the heading in a balance sheet is always a balance sheet as at a particular date or on a particular date. Now, depending on which country you're in and which systems you're using, whether it's GAAP or IFRS or sometimes called IFRS, it might be called a balance sheet, or another name is statement of financial position, but it's using the same thing. This is your most basic diagram of a balance sheet. There's money that comes in and money that you take the money that's come in and you invest it, and those are the two sides of the balance sheet. The balance sheet just tells you what money came in and what did you do with that money. The money can come in two different ways. It can be money that is invested in the business by the shareholders, by the people that own the business. That's called equity. The other bit can be money that is lent to the business, and that's called debt. Money that's invested is equity, money that is lent is debt. The key difference is equity holders share in the profits. Debt, people who lend money to the business, they get interest. What do we do with that money? Well, we buy things with it. Even if we keep it in cash, that is all called assets. So where the money is still in cash, that's an asset. If we take that money, we convert it into buying machinery or motor vehicles or anything like that, that's still an asset. But the difference is, one is what we call a current asset. It's current meaning short term. And the other is what we call a fixed asset. And fixed doesn't mean that it's physically fixed to the ground. Fixed means that it is longer term. Now the question is, what is longer term? Because it's all relative. So anything that is 1 year or less, that type of asset is seen as a current asset. Anything where you're going to buy an asset and you're going to have that asset in the business for longer than 1 year, that's termed a fixed asset. Okay, another name, again, if you're using GAAP or IFRS or IFRS, the terms might change slightly. So you would have a current asset, and instead of fixed assets, they kind of call it something weird, but instead of a fixed asset, it's an asset that's not a current asset, and therefore it's called a non-current asset. So you can have current assets and non-current assets. The classification of all financial information is into one of these 5 things. It's assets, it's liabilities, it's owner's equity. Remember, your assets are split into fixed and current. The liabilities are people that you pay with and you owe them interest potentially, and the owner's equity is just what the owners put in. The revenue is the revenue accounts, expense accounts, that belongs to the income statement. So the first three, 1, 2, and 3 are going to the balance sheet. Your balance sheet is broken out like this according to the accounting equation, and the accounting equation is that you have your assets equals your liabilities plus your owner's equity, so A equals L plus OE. And this is really what you have. It's broken down. You can see your assets are current assets and fixed assets, and where does that money come in from? Your equity is your debt, as we have discussed earlier. If we look at the layout of the balance sheet, this would give us what it would look like according to IFRS, where you got your equity, your debt, and your current liabilities on the one side, and your assets on the other side. It's very easy to see that another format, and the way GAAP might look at it, is that they group it slightly different. So your current liabilities are on the other side of the balance sheet, and you have your current assets minus your current liabilities, that we call net current assets. But we'll get to that in another video clip. This is your basic layout of the balance sheet. It can be laid out, as I said, in the two different ways, IFRS and GAAP. This is the way it would look like with IFRS. 2,800 on both sides, it does balance. But you can see the current liabilities on the one side. If we move it to the other side, it will still balance, but on a different figure, because we're subtracting that amount from this side of the balance sheet. So it's added on the one side or subtracted on the other side. If we look at an actual balance sheet, this would be of Apple. You can see you've got current assets and your long-term assets. That gives you total assets on the top. At the bottom, where did that money come from for those assets? You got your current liabilities, short-term things that you owe. You got your long-term liabilities, and then you've also got your shareholders' equity. And this is the format of the balance sheet. And you can see it's 290 billion on the one side and 290 billion on the other side. And that would be your balance sheet. And this is profit. Yes, profit. To get access to other similar videos, please subscribe hitting the button below.